All right, good morning. This is Axel Merk, President and Chief Investment Officer of Merk Investments with a Monday morning update. Hope everybody had a good weekend. The week is starting off on a risk-off mood. S&P futures are down. Bonds are actually kind of flattish, um, and the dollar is up today. The S&P futures are down 22 right now. The 10 years up 2 ticks. The 30 years down 2 ticks. More interesting, well, the 3 month is at 10 basis points, but more interesting is that 3 month LIBOR is at 43 basis points. When I started doing these, we were significantly about 1% of 3 month LIBOR, even though the 3 month T-bill rate was already down there near 10 basis points, and so that spread is slowly coming down. Fed funds effective rate is at 5 basis points. And while I'm on that topic, let me digress here right away. I posted on Twitter as of, I believe, Thursday, 1 year out Fed funds futures were above 100, suggesting negative interest rates a year out. This morning, the June contract for next year was at 100.02, which suggests a minus 2 basis point Fed funds rate a year out. Now, how is that possible? And the first thing, of course, that comes to mind, well, energy has gotten negative, oil got negative, so anything can go negative, and maybe we'll go into negative rates. And by all means, it is certainly conceivable that the Fed changes its mind and will go negative. Who also we don't know whether Powell will be the Fed chair in a year from now. We assume so. Um, but let's think about it in a different way. In a quote unquote normal environment, let's say the environment we were in before the virus. If you let's just assume for now, let's make these even numbers. Interest rates are at 2%, and the Fed has promised to keep interest rates at 2%. Um, so two things can happen. Either numbers come in so that rates will need to be higher anyway. Inflation does pop up, although the Fed has committed them to be long and so forth. And so the odds are very low. But then you have to price in the possibility of a shock that rates might come down. And so when you look then at rates further out, they'll always be a little bit lower than where it's likely to be. And some people play that game, they play and try to harvest that differential. It's like many other things on the short side. And let me just throw out some here disclosure, and this doesn't cover derivatives, but by all means, please don't trade derivatives. Those are not for the faint of heart, for the most part, anyway. And basically, the market is pricing in that things could get worse, things could get weaker, and therefore that often forward interest rates are lower than the actual rate. And so it is not terribly surprising in some ways that if you look at rates a year from now, the Fed has promised to keep rates near zero, that the market is pricing in a little bit less. And just to be precise here, the Fed is usually forecasting a band of zero between 0 and 25. Now the Fed funds effective rate is at 5 basis points. And it's achieving that, by the way, mostly with interest and extra reserves and other things. But in any case, when interest rates are that low and the market wants to price in, hey, maybe just maybe there's going to be another shock. Well, how are you going to do it? And I suppose that's how you do it on the Fed funds futures. You price them in to be negative. Whether that's realistic or not, I do not know. I am certainly not going to be the one telling you you should trade this, because if rates are actually going to be at zero, sure, there is a gain to be made from kind of minus 2 basis points to just there. This is a market to just back up a little bit, and that's why the LIBOR market is so relevant. This is a market where many banks are hedging their mortgage exposure. Now, when you buy a mortgage and you lock in your interest rate, well, the bank also needs to hedge themselves, and they often do that in the LIBOR market. You can also do it in the Fed funds market, but the LIBOR market is the more liquid one. And the LIBOR market happens to be one that's liquid for many years out, let's say. And also it's a market where a lot of leverage is often used, meaning you put in very little collateral. And that's because these are used for these things are not supposed to move so much, right? The sort of moves we had to cut down rates to zero, very dramatic, a very short period. That's highly unusual, and so a lot of people use leverage, and so there some hurt can be done. On that note, leverage and hurt can be done were articles over the weekend in the Wall Street Journal and otherwise, how one particular brokerage firm had significant losses, over $100 million in losses, because of oil trading negative, that their systems were showing 1 cent. And then some day traders were using that as a reference point and were actually trading, buying and selling. And some of them had significant losses, some of them in the millions. And it looks like the broker compensated those investors for it. And so that shows you that some odd things happen. I think we can all be glad that there wasn't more damage done, in the sense that there's no big quote unquote blow up of a brokerage firm, and that they can absorb these sort of losses. So I skipped over what the world markets are doing here a little bit. The Euro Stoxx 50 is on 1%. Nikkei was up 1%. So Europe is mostly down. There was a positive mood, and then after Asia closed, it became a tad more negative. Nothing extreme here. Let me cover a few, and just gold. I don't think I've mentioned. Gold is currently down 50 cents at 17.02 in the spot market, and down $10 at almost $11 at 17.03 in the futures market. Let me, if I can see that, I have a little different setup today, so bear with me here for a second. A few things. First, locally, some of you may have heard in Pasadena, California, there was an outbreak related to a birthday party, a violation of the distancing order, expanded relatives, friends, and whatnot. The reason I mention it is that apparently there was some tracing that was used. So apparently either was big enough or important enough, or in general, the capacities have increased that people are back to tracing. The daily tests are increasing. We see these numbers, but presumably you or I don't see how that actually happens. I have mentioned various times that, when I jog by the testing center that's set up locally, it's pretty empty. In some ways, it is good news to see that they're able to trace things down to an outbreak, and then from there, obviously, go outward. And the reason that's necessary is because, as you may have heard as well, in South Korea, there was an outbreak related to a nightclub. Korea, obviously, much more rigorous in the contact tracing, testing as many people as possible. Obviously, also not the same sort of privacy concerns that we have in the US. And they are pretty sure that in some of the nightclubs, the virus was spreading, and now they're trying to kind of get that. They're suspecting to have as many as 5,000 cases. That right now they don't have as many confirmed, obviously, but that's the estimate as how bad it could be. And so this sort of thing gives us a real-time view into the second wave type of outbreak, and what one can do and should do or may want to do as these things happen. And so we can watch Korea deal with this. And then obviously, if and in this context, the Pasadena incident, I think, is relevant because we can see how we're ramping up that capacity here as well. And then just one other tidbit that I thought was interesting, worth mentioning, is that obviously the tourism industry has been hurt pretty bad. And what they're doing in Europe is they have these big tour operators that have these package deals, and they have hotels they're affiliated with. And so they have said, hey, on Mallorca, that's an island the Germans love going to, the hotels are safe. They have done the various tests, and so they're trying to build these green bridges, so to speak. That's what they call them, I believe, where it said, all right, locally it's you don't have many infections, in the other place you don't have any infections, so why don't we allow the travel between the two? And so the tour operators are very keen on showing that they can do that, and apparently the governments are very open to entertaining those sort of ideas. Good. Then otherwise, let me just see what I see on my screen here. The Brazilian real is the weakest currency. The Kiwi, the New Zealand dollar, the Australian dollar, the weakest currencies. That's something as well to be noted. Let me just make one more comment about the Eurozone. On Friday, I believe it was, I mentioned that I'd heard that The German government had spent a third of GDP to save a 7% drop. That's kind of correct, but it's mixing apples and oranges just a tad. And the thing is about the stimulus is it does kind of depend on how a stimulus is done. A spending like a check that's given to an individual is different from a loan that's expected to be paid back, or for that matter, for funding operations, right, to keep liquidity in the market. And so they're all a little different. Obviously, you can tally them up, but I prefer to tally them up in kind of separate columns. The question still is, around the world, Germany has just announced that they are spending 750 million euros on vaccine development. I think that's the right sort of place to spend the money on. Um, but these are huge, huge numbers. German economy is a fraction of the U.S. economy. It's a large economy, but it's much much smaller, and so these are huge numbers relative to GDP that are being spent, and uh, and so that is ramping up. What would be very helpful if you allow businesses to reopen, if that was more immediately to spend the money on and do it in a safe way, obviously, um, and then to allow them to invest. And with that, I'm going way beyond the virus. When we've had 10-year yields throughout the world very low in various parts of the world negative, that's a sign that something is wrong, that you're more willing to give money to a government and invest the money. And so that is a lot of soul searching that governments should be doing. And instead, unfortunately, they're thinking more about the stimulus part of it. You need to encourage investment, and you do that by good long-term policy, not by shots in the arm. Anyway, I'll leave it at that. Have a great week and stay safe out there. Take care. Bye bye.